Hello everyone, welcome to the channel. There are two Apple stock covered call ETFs in the market right now. Both have the ticker symbol APLY, but each has its own unique covered call strategy. Yield distributions for the two ETFs are monthly. Apple Yield Shares Purpose ETF with ticker symbol APLY is listed in Canada's NEO Stock Exchange. It was launched in December 2022. This is APLY.NE if searched in Yahoo Finance, and it has a 7.9% annual yield. Meanwhile, YieldMax Apple Option Income Strategy ETF with the same ticker symbol APLY is listed on New York Stock Exchange ARCA. It was launched in the middle of 2023. This is APLY if searched in Yahoo Finance. It is still new, so there's no yield info for each distribution yet. Apple Yield Shares Purpose ETF strategy is quite straightforward. Purchase Apple common shares, then use moderate leverage of 25% to purchase additional shares. After that, overwrite covered call options on 50% of the portfolio. In this way, the investor can stay invested in Apple while earning an attractive tax-efficient monthly yield. Let's take a look at their holdings. As you can see, there's only one underlying, which is Apple. And fund managers do covered call options on 50% of the portfolio. They will show the moneyness of these options in their website. Meanwhile, YieldMax Apple Option Income Strategy ETF strategy is a bit complex. It uses a synthetic covered call strategy partly similar to poor man's covered call ETF, and they don't use leverage. The fund managers purchase call option contracts at the money with 6 months to 1 year expiration date to provide exposure to positive price returns of Apple. If the stock of Apple increases, these options will generate corresponding increases to the fund. Then, sold put option contracts at the money with 6 months to 1 year expiration date to help pay for the purchased call options described above. However, the sold put option contracts provide exposure to the full extent of any share price losses experienced by Apple. Next one is sold call option contracts out of the money with 1 month or less expiration dates. They generate current income. However, they also limit some potential positive returns that the fund may have otherwise experienced. The last step is to purchase US Treasury securities with 6 months to 2 years maturity. These instruments are used as collateral for the fund derivative investments. They will also generate income. Just a reminder, the fund does not directly invest in Apple. Let's take a look at their holdings. So there is the United States Treasury security, 2 of them. Then they have purchased an option expiring on December 15, 2023. The next one is they have sold the put option, which is expiring the same date as described in their strategy. The last row is they sold covered call, which is expiring on May 5, as described also in their strategy. So those are their holdings. So there you go. Please do your own due diligence if you want to invest. I think the strategies can be emulated, but huge capital is needed. On the other hand, we have purchased 27 shares of Purpose ETF APLY and 24 shares of Yield Max ETF APLY on May 1, 2023. Details are in our portfolio tracker in the description below. Thanks for watching. If you like this video, make sure to subscribe for more. Remember, only invest what you can afford to lose.